Good afternoon, students. I'm Dr. Nikhil, faculty for economics in Board of Studies, and I am taking care of both subject of economics at both the intermediate and the foundation level. As you are aware that at the foundation level, you are talking, you are basically studying economics for finance, which is 8B of the paper number, and it is with financial management. Generally, economics for finance paper is consisting of 40 marks, wherein the detailed syllabus I'll be discussing with you regarding the whole pattern of examination, the weightage schemes, what the whole content is all about, and what is the importance of economics, particularly what at the intermediate level and at the foundation level you people have studied or are studying, is basically how it will be helping you as a chartered accountant in future. Now, the point is, as you are aware that India is an economy where a lot of changes has been taking place day in day out. So basically, the theoretical aspect or the theoretical concept of economics that we are studying is helping us in understanding what the major changes or what are the changes that is been occurring in the economy at large. So it is a quite interesting subject, and people who have studied economics at the 10th, at the 11th and 12th level must be familiar with the basic concept that is been already been taught at the 11th and 12th standard. People who have opted for economics at the class 11th and 12th level. Now, definitely the basic intention of putting this subject in the CA course is that as you grow as in life, or you after becoming a chartered accountant, you must be aware of the macro aspect of the economy, where anything, any business model or any strategy that you are putting, or any taxation principles or any taxation strategy you are placing, must have some certain impact, and definitely that will be helping you that you are understanding the things in a proper context. So formally, I'm starting with the core concepts and how this whole paper is been divided into two sections. What is the weightage? What are the different components which we are studying here, and what is the pattern of questions that is been asked in the examination, and how that has recently some of the analytical questions has also been added in the recent examinations. Good afternoon, Mansa, Mohammed, Anmol. So it's good that people are have joined this session, and definitely we'll be having a engrossing 2.5 hour next, so that I'll be also benefiting from your responses, and you will be also getting some insight that how to study this subject and score good marks. So the first thing is, what is the objective of economics for finance? Now, the thing is, the basic objective of the paper Economics for Finance is to develop an understanding of the concepts and the theories of economics, and to acquire the ability for addressing application oriented issues. What does it means? It means that the theoretical part that you are studying in economics, the concept that you are studying in economics, has a dynamic effect that you can directly relate it with the problems occurring in the economy. Suppose you have studied inflation, you have heard about inflation. Now, if you see in the pink newspaper that inflation rate has increased, the CPI, the WPI has increased. Now, definitely, if you have studied that in a textual part or the conceptual thing, you can easily correlate with that. every day you are hearing about GDP, GNP, repo rate, reverse repo rate. These are the things frequently occurring in common parlance, and that has been frequently appearing in newspaper also. So the objective of this paper is to understand the theories and to acquire the ability to address application oriented issues. Now, as per the division of the syllabus is concerned, uh, since July 1st, 2017, this paper 8 is divided into two sections. First is financial management, that is consisting of 60 marks, and the second part is economics for finance, which is been consisting of 40 marks. And generally, the division of the paper, the marking pattern is been adhered in the question paper also. So definitely that is already been adhered to, and you must be aware of, or if you have already appeared in the previous paper or you are appearing for the next one, already the syllabus is been already been given in the study material, and you must be aware of that. So accordingly, you had to prioritize your strategy and how to score good marks in economics. I'll be giving you some useful tips also, so that you can score better in the coming examination. Now, the most important thing is the study material. Everybody, all the students must be having the study material. Rightly said by Mansa that economics is the mother of finance. Definitely, it is a quite an interesting subject, and definitely a person who is having knowledge of finance must also have some understanding of economics also, because that makes a lethal combination. So the study material that you guys are having, or you people are with you, is basically very important tools to score good marks, because ultimately whatever the expositions, whatever the text that is been given in the study material is very helpful in understanding the subject in a lucid way. Means in a very easy language, the whole study material is been prepared, and accordingly the students who have read the study material carefully and practice the questions that has been there will get good marks in the examination. But you need to be consistent with the subject. Don't neglect the subject. Give equal importance to all the subject that you are studying at the intermediate level, because that is very important. Because at the last moment, if you are studying some subject, so definitely it will be it will be like it will be burdensome for you also, or definitely you won't be having create interest in that subject. Now, the next important part is, in uh, every chapter, at the end of every chapter, we are having the learning outcomes. The learning outcomes that has put across at the beginning of each unit orient the learners to the key concept, and at the end of the chapter there are summaries which is intended to integrate the discussion in the units. So while you are preparing for the exams, you have studied the concept in detail, but at the final moment, if you want to brush up the things, these summaries at the end of each chapter is quite helpful. So don't neglect that the summaries, that it is the summary that you are already knowing the concepts in detail, but they are quite helpful while you are answering your questions in the examination. Now, as you are aware that the weightage already had discussed that is already been given in your syllabus also. So accordingly, the weightage has been allotted to various topics in the subject, and this has been disclosed in the syllabus that is been given to you, or that is been appearing in the study material that you are having. Then the second part is the level of questions, that how the question is all about. Now the question, the basic motto of asking the question is to test both the knowledge and the application based question, which has been helping the student to analyze that what is the practical application of the subject. So it's a blend of mixture of both. Generally 24 to 32 marks question is basically of knowledge based question, and 8 to 16 marks question is basically of application oriented questions. And the most important thing is all the chapters or all the units that is been there is carrying equal weightage, because the 4 units that I'll be talking about to you later is of equal importance, because whether you are studying national income accounting, whether you are studying public finance, whether you are studying money market or international trade, the whole the 4 unit that has been given in this economics for finance paper is of 20 to 25% weightage, and accordingly the questions is in the range of 8 to 12 marks, because as you are aware that the first question is a compulsory one, and out of the 4 you need to answer 3. So there is an option also given in the question paper. Now the topics in economics for finance, the first unit is determination of national income, and where we are talking about the macroeconomic aggregates and the measurement of national income. And the second part, we are talking about the determination of national income. We are studying about the Keynesian model, the 2-sector model, the 3-sector model, and the 4-sector model. We are also having seen the distinction of the classical and the Keynesian theory of economics. That is very briefly that has been put there in the study material of yours. The second unit is talking about the public finance. The public finance, in the unit we are talking about the fiscal functions, we are talking about market failure, how the government intervened to correct the market failure, and the fiscal policy. The fiscal policy is very important tools because it is dealing with the taxation and the revenue part, how the management of the economy is to be done. The fiscal policy is very important. Krishna has asked a question that it is pertinent to ask to write the bookish language in economics for finance. No, that is not very important, but there are certain concepts. Now concepts, there are certain definitions. Now there you required to write the language that has been given in the this study material. But if you are having an explanation of the theory and you have understood the concept very clearly, then you can write in your own language also. That is not a compulsion. Then after public finance, then we are having the money market. The money market, we are talking about the money demand for money, the important theories of money, then the concept of money supply and the monetary policy. And the fourth unit is of international trade, that is all the theories of international trade, the trade policy, the trade negotiation, exchange rates, and international capital movement like FDI, FII, which that has been given in your subject. The next important thing is the pattern of the questions. as I told you earlier, that the question number 1 may be compulsory and it's consisting of 10 marks of 2 or 3 sub questions that has been consisting of 2 marks or 3 marks, because the whole unit, the first question consisting of 10 marks. So whether it is 2 marks 3 questions and another is a 4 marks question, or 5 marks question, another is 2 and 3 marks question. So accordingly sub questions are part of the question number 1. Although in most of the paper, in all the other questions also, there are sub parts which has been there, because nowhere the question is of 10 marks. Mostly the maximum the question is of 5 marks, rest the question is of 2 marks, 3 marks only. So accordingly you need to be brief in the writing, and you need to be very clear that what you are writing. Now sometimes it happens that you have written the right concept, but you have written the wrong example. Now that gives an impression in the mind of the examiner that the person had not understood the concept clearly. So don't repeat this type of mistake, or don't do this type of mistake, because examples is very important. If you know the correct example, then definitely it creates an impression that you have understood the concept very clearly. Now again, question 2 to 5 consisting of 10 marks each, out of which student had to choose any 3. So out of the next 4 questions, you have option of selecting 3, and that again consisting of 10 to 12 marks or 8 to 10 marks, depending upon the weightage that has been given, and accordingly the paper is of complete paper is of 40 marks. So you accordingly you have been evaluated on the basis of 40 marks, how you are scoring in the 40 marks paper. And each question is having sub parts which has been consisting of 2 to 3 marks question. Now mistakes means learning. The most important thing is, while learning, if you are making mistake, it means that you are right on target, you are understanding that thing, and in the process of your getting your the subject to perfection, you are initially making some mistakes, and from that mistakes, if you correct the mistakes, definitely you will become again very proficient in the subject, and accordingly the confidence level of yours will be higher. So some things before the exams you need to remember that: read the BoS material, concepts, and practice different questions that has been given in the BoS study material. Then practice the revision test paper and the mock test paper from time to time, because every time before the examination you are having a series of mock tests that has been conducted by the institute. So accordingly you can practice, or you can test your knowledge, that how far the preparation of yours is helping you in scoring good marks in the examination, because ultimately you are also having the questions and the answer is simultaneously given. So accordingly you can also check, and you can also make yourself confident that what is the right strategy to write in the exam, because ultimately there are every subject has its own importance, and accordingly the way of writing does matter, because ultimately you have to first explain the concept, and second part is, if any application of the concept is there, then you have to apply that concept, or if any examples is been asked, you give the examples of the paper. Then you have to refer to the previous suggested answers, complications to be observed, and the complexity of the questions that is generally been asked. Because if you see like the December 21 examination paper, or May 22 examination paper or the earlier paper also. Now, seeing the paper, you can easily evaluate yourself that how far the question is been asked in the examination, and if you are practicing the mock test, you can also check your answer there also, that how far you are faring with the answer suggested there or answer given in the mock test paper, and your answer that you are applying or you are writing is matching or not. So definitely that is been helpful, although that is just a way to help you in the examination. Even you can write better answers also. That is not a issue, because ultimately the concept that you are understanding, you are able to better represent in your language also. Now, while answering the questions, give equal emphasis to both the theoretical and the practical questions. Now, here some students are good in practical questions, some are good in theory questions. Although the paper is blend of both the theory and the practical questions. Generally, if you do the practical question correctly, you will get full marks. So try to revise the formulas that is been given in each chapters, and try to practice as much as you can. Then in economics, graph and diagrams are very important. You need to practice that thing. Like here, Mr. Reddy has asked about the liquidity trap China has struck in. Now, in the study material, we had already given the concept of liquidity trap, that below this the rate of interest we won't be coming down, there will be a horizontal line there. So accordingly, if you have studied that concept of liquidity trap in macroeconomics, you can correlate that how China or any other country is falling in that trajectory or not. So accordingly, you can analyze it yourself. It's then the important thing is try to establish the linkage between the concept, because that is related. Like if you are able to calculate private income, then again the next thing concept is personal income. Now the next concept is the personal disposable income. There are certain addition of concept that will be helping you in calculating this the whole private income or personal disposable income. So there are linkage in the questions also, in the concept also, to try to establish the linkage between the different concepts. Then don't mug up the formulas, and try to understand that what is the reason behind the formula, or how the formula is been derived. Then another important thing is you have to practice numericals on regular basis to score better, because definitely here the paper for economics for finance, the questions are not very complicated one. So if you know the formulas correctly and you place the value that has been given in the question correctly, you can easily derive the answer, and that will definitely give you the confidence also that you can score better in the examination. Then try to correlate the concept with what is happening around in the economy, because ultimately, as I told you, that economic is a dynamic subject, and every time something or the next is happening in the economy. So definitely, if you studied the concept with clarity and you have the concept of that, you can easily correlate with that what is the trend that has been going in the economy, or how far the implications of the trend that has been coming that has been represented in the newspaper or you are seeing in TV channels, what is the reason behind that trend. Although we don't expect at the intermediate or foundation level people to be very proficient in understanding all the concept in great depth, because there again statistics, econometrics, all other tools are also widely being used while when we are talking about forecasting or you are doing the trend analysis. So accordingly, at a basic level, at least if you know the concept, you can understand the terminology. Apart from this, you can also understand the reason how that has been happening. Now, we are coming to the unit 1 of your study module, that has been is the national income accounting. Now, that is a very important concept, because here all the aggregates that you are studying, you must be already knowing about that thing, or that is already will be appearing in newspaper on a regular basis. Now, what is national income? Now, national income is defined as a net value of all the economic goods and services produced within the domestic territory of a country in an accounting year, plus the net factor income from abroad. So, whatever been produced within the domestic territory of a country, plus what we earn from abroad, the net factor income from abroad, both are being totaled up, and accordingly the national income is being calculated. Now, you must have heard about the Central Statistical Organization, which used to compile the data of national income. Now, Central Statistical Organization has also given the definition of national income, and which is as national income is the sum total of factor income generated by the normal resident of a country in the form of wage, rent, interest, and profit. This is how the Central Statistical Organization has defined national income. Now, what is the importance of national income? Now, the first important thing is the distribution pattern of national income determine the pattern of demand of goods and services and enable businessmen to forecast the future demand for the product. Now, what does it mean? Now, the distribution pattern of the resources will help the businessmen to forecast that what are the goods or what are the services that is been demand and that need to be produced or procured on a regular basis. So accordingly, the trend can be established, and accordingly, businessmen are prepared for the delivery of more and more goods, which is in demand by the public at large. Now, second thing is the economic welfare also depends upon a considerable extent on the magnitude and distribution of national income, size of the per capita income, size of the per capita income, size of the per capita income, and size of the per capita income and the growth over the period. Because the point is that economic welfare also depends upon the distribution of the income, because and accordingly the per capita income which the individual is having, that determines the demand pattern of the society. Because if you are having a large per capita income, definitely your demand will be higher. If you are having a low per capita income or your disposable income is less, so definitely you have to curtail down your demand, because demand wants are infinite, and you cannot satisfy all the wants, the desire you are having. So accordingly, you had to live within your means, and accordingly, you had to prioritize on the thing that you are in need of. Then there are certain concepts that is been regularly you people are aware of, like GDP at market price. Now, how GDP at market price has been calculated? Now, GDP at market price is value of output in the domestic territory minus the value of intermediate consumption. Now, GDP at market price is also summation of the value added of the all the three sectors that is prevailing in the economy. Now, second important thing in calculation of GDP is the intermediate goods, the use of intermediate goods. Intermediate goods used to produce other goods rather than sold to final purchaser are not counted, as it will include the double counting, whereas final goods are those that is meant for final consumption. So intermediate good which has been helping in the final calculation should not be doubly counted. Second, the GDP is calculated both at the current prices and the constant prices. Now, if you used to compare that how far from like 1980 to 1990, how far the economy had fared. Now you had to compare on the basis of both the current prices trend and the constant prices trend. That on the basis of constant prices, how far your level of standard of living had increased over the period, or what is the good thing that you have gotten over the period, or how the trend of this the current and the constant price is giving you the result that you are better off or you are worse off. Then there are certain formulas that is already been given, that if you had to calculate like GDP at market price, now you have been given GNP at market price. Now you have to calculate GNP at market price. Now GNP at market price is GDP at market price plus net factor income from abroad. Now NDP at market price is GDP of at market price minus depreciation. NDP at market price is NNP at market price minus net factor income from abroad. Now, if you are having a concept such as net national product at market price, and you had to calculate gross national product at market price, now you have to deduct depreciation from that. Accordingly, these values are calculated both at the factor cost and the market prices. So accordingly, the effect of net indirect taxes comes into picture. So if a market price is to be calculated, now definitely the factor cost plus net indirect taxes need to be added up. Now net indirect taxes is indirect taxes minus subsidies. So accordingly, in the numerical formulas, all this value is been given, and you need to just remember that what need to be subtracted, so that you can exactly calculate the value of the concept that is been asked in the examination. Now then gross domestic product at market price is GDP at market price minus net indirect taxes plus subsidies, and net domestic product at factor cost is defined as the total factor income earned by the factors of production. Then there is NNP at factor cost is also known as national income. So suppose in a numerical question you have been asked to calculate national income. Now the first thing that need to be striking in your mind, that we had to calculate NNP at factor cost. So accordingly, whatever the data that has been given in the question, you need to accordingly subtract or accordingly add up the concept, the formulas that has been given, or the value that has been given, and accordingly you have to calculate the NNP at factor cost, which is again the same thing as national income. Then NNP at factor cost is also equal to factor income earned in the domestic territory plus net factor income from abroad. Now, just a few minutes back, I had talked about this personal income, disposable income, and the private income. Now, what is personal income? Personal income is a measure of actual current income receipt of person from all the sources. Personal income is a measure of actual current income receipt of person from all the sources, and disposable income is what is available for consumption or savings, and it is derived from the personal income by subtracting the direct taxes paid by the individuals and the other compulsory payments made by the government. So accordingly, the disposable person income that you are having is actually the income that is in your hand, and you can spend in purchasing the goods or the services that you want to buy. Then private income is the measure of income which accrue to the private sector from all sources within and outside the country. And if you have to calculate private income, then private income is factor income from net domestic product plus net factor income from abroad plus net debt interest plus current transfer from government plus other net transfer from rest of the world. Now, these items that add up to the calculation of private income, that you need to remember the thing, because most of the data that is been totaled up to calculate the private income is already is been given to you in the examination. Few additional data is also been given, so that it need to it is there to test you whether you remember the formula correctly or not, or if you are adding something which is not necessary for the calculation of this concept. Then as you are aware that or you have studied that there are three methods for calculation of national income, and through all the three methods you will be getting the same result. Means the national income calculated is the same. It is only the perspective that from different angle it has been calculated so that it can be verified. Now, if you calculate from the production method, like that is gross value added is equal to value of output minus intermediate consumption. It is equal to value of output minus intermediate consumption. Value of output minus intermediate consumption. Now, value of output again is the summation of sales plus change in stock, and again change in stock is equal to closing stock minus opening stock. Now, if in the question paper you had you need to calculate the gross value added at market price, and in the question the value of sales has been there, the opening stock is there, the closing stock is there, and then immediately it could strike in your mind that change in stock is what is basically closing stock minus opening stock. So accordingly you can get the value of the change in stock. Now again from the income method, the NNP at factor cost is calculating, adding up the compensation of the employees, the operating surplus, the mixed income of self-employed, and the net factor income from abroad. Now again operating surplus is the income from rent, interest and profit. So if you add up, you will get the operating surplus. Then from the expenditure method, private final consumption expenditure plus government final consumption expenditure plus gross domestic capital formation plus net export. Even the gross domestic capital formation, the value has been there. Now gross domestic capital formation also includes net domestic capital formation plus depreciation. So accordingly, you need to place the value that is been given in the paper to calculate whatever is been asked in the examination. Now here we are doing a sum where the values is been given, the sales, the compensation of employees, intermediate consumption, rent, interest, net indirect taxes, consumption of fixed capital, consumption of mixed income. Now you have to calculate the gross value added at market price, GDP at market price, NDP at market price, and NDP at factor cost. Now just calculate and give me the answer that what is the value of GDP, gross value added at market price. I had just told you that what gross value added at market price is. So anybody who can calculate it fast, that what will be the value of gross value added at market price? Because again the value of sales is there, then what need to be added and what need to be subtracted to get the exact value of gross value added at market price. You're calculating? Okay. Let's solve that how that has been calculated. Now if I had to calculate gross value added at market price, then the first thing is gross value added at market price minus intermediate consumption. This is how that has been calculated in the production method. Now as I just told you that gross value added, gross value output is equal to sales plus change in stock minus intermediate consumption. In the data, the value of sales is given at 4,000 and intermediate consumption is given at 600. If you subtract 4,000 minus 600, the value is 3,400. So the value of gross value added at market price will be 3,400. Now GDP at market price and gross value added at market price is the same thing. So the value will be 3,400 only. Now again, if you had to calculate the NDP at market price, now you had the value of GDP at market price minus depreciation or consumption of fixed capital, which is given in your question as 200. So if you subtract 3,400 minus 200, the value will be 3,200. Again, if you had to calculate that NDP at factor cost, then NDP at market price minus net indirect taxes. So 3,200 already NDP at market price, earlier it has been calculated, and net indirect taxes is 500. So if you subtract 3,200 minus 500, the value will be 3,200. And NDP at factor cost is if you had to calculate the value of the operating surplus. Now again NDP at factor cost has been given, compensation of employees given, operating surplus is you have to calculate, and the mixed income of self-employed has been given. So accordingly, if you are placing the numbers at the respective position, you can get the value of the operating surplus as 1,500. So in this paper, in the first unit of national income accounting, mostly calculation of how to calculate GDP, how to calculate national income, how to calculate the through production method, how to calculate through income method, how to calculate through expenditure method, these are being tested. or what is the value of the private income, what is the value of personal income, what is the value of the personal disposable income. So this type of concept has been there in the study material. All the formulas that has been there at one place. So write all the formulas at one place and revise that thing, so that while calculating immediately it strikes you that these are the values that need to be deducted, or these are the values that need to be corrected, that need to be added while calculating the respective component that is been asked in your examination. I hope till now it is clear to you. आप लोगों को अभी समझ में आ रहा होगा कि हमें एग्ज़ाम में कैसे तैयारी करनी है और किस चीज़ों पे ध्यान देना है. बिकॉज आई एम टेलिंग यू इन अ वेरी सिंपल लैंग्वेज दैट how to prepare for the exam and how to study, taking in the help of the study material that has been there itself, and all the classes that has been already been conducted by ICI to help you in understanding all the concepts, the live virtual classes and all other initiative, the capsule that is appearing in the student journal is quite helpful in preparation of the respective subject. Now, the second unit of your syllabus is the Keynesian theory or the determination of the national income. Now, there is a distinction between the classical economist and the Keynesian economist. The classical economist maintained that economy is self-regulating and accordingly is capable to achieving equilibrium at the natural level of real GDP or output. It means that whenever there are some disturbances in the economy, automatically no corrective measures by the government is to be taken, and accordingly the economy will be back to the equilibrium level. But in real sense, after the Great Depression of 1930, it has been realized that there are other factors also which is been equally important to bring the economy to the equilibrium level, and it's not it has been done automatically. There are interventions that need to be done to bring the economy back to the equilibrium level. So what Keynes has argued that market would not automatically lead to full employment level and the resulting natural level of real GDP. The economy could settle at the equilibrium at any level of unemployment. Keynesian believe that the price and wages are not so flexible, they are sticky, especially downwards. So what Keynes in a nutshell has argued that there are intervention that has to be intervened, or that has to be done to bring back the economy at the equilibrium level or the real GDP level, what has been talked about the classical one or the Keynes. Then there is three types of model that has been given in your paper: the 2-sector model, the 3-sector model, and the 4-sector model. These are simple models. There is not very complicated, only addition of one extra component that has been there. So in the 2-sector model, aggregate demand consists of two components: aggregate demand for consumer goods and investment goods. Means Y is equal to C plus I. Y is equal to C plus I. Now, as you are aware that consumption is a function of income. So as your income increases, so as your consumption. And accordingly, the saving also comes into picture. If you earn more, you have the ability to save more also. So consumption is having a functional relationship between consumption expenditure and aggregate disposable income. So consumption is a function of income. The specific formula for consumption function, as you have studied, is C is equal to A plus BI, where B is marginal propensity to consume. The value of increment to expenditure per unit of increment in income is termed as marginal propensity to consume. As your income increases, definitely again the expenditure pattern or the pattern of your expenditure also increases. So accordingly, whatever the difference that is been there itself from one level to another is known as the marginal propensity to consume. Then in the three sector model, consumption is there, then investment is there, then government demand for goods and services, means the government sector is added. Government sector, the government sector is added. Now what does the government do? The government impose taxes on households, effect transfer payments to the household sector, and subsidy payments to the business sector. So accordingly, in equilibrium, S plus T is equal to is scheduled to intersect I plus G at the horizontal schedule. So the interest of government sector will change the equation Y plus C plus I plus G, because again the government is entering into the picture. In the four sector model, again the formula is the same, only thing is the export import sector is been added up. So Y is equal to C plus I plus G, again plus X minus M, X export minus import. So this is how the value in the all the force 3, 4 or 2 sector model, the value is calculated, and accordingly this type of question is also been asked, that you have been given the value of C, or you have given the value of consumption function, you have been given the value of I, and you have to calculate G. So if you know the formula that Y is equal to C plus I plus G plus X minus M, accordingly you can place the data or at the respective place, and accordingly G can be calculated. So in the first unit, generally more weightage is been given to the numerical part, although the concept is also important, but generally few questions on testing the numerical ability of the student is been asked from these two questions. To kindly remember all the formulas that has been given in your study material, so that you can score good marks in the examination. Now next part is public finance. Now public finance, you have heard about the Great Depression of 1930, which I had just talked about. Then again, the role of the government is also very important. The intervention of the government is also important to correct the disequilibrium in the economy. So the traditional function of the state, like maintaining law and order, has been supplemented with the economic function, also called the fiscal function or the public finance function. So as the complexities of the economy has increased, accordingly the role of the government has also increased. Now so public finance is also talking about the role of the government or the fiscal functions or the public finance functions. Now in public finance, Richard Musgrave was a person who has defined the role of the government as allocation of resources, income distribution, and macroeconomic stabilization, because these are the three important functions in public finance: how to allocate the resources, how the distribution of income is to be done and how the stabilization is to be maintained, because these are all very vital in public finance, and these are all the vital functions of the government. Now, the role of the government, the liquidative responsibility of the government involves appropriate action when private market fails to provide the right and desirable combination of goods and services. Generally, private sector works for more of a profit motive, while the government has welfare measures in their mind. They don't exactly work for a profit motive. Ultimately, the benefit to the citizen is the topmost priority. So, allocative responsibility of the government involves appropriate corrective actions which involve where market fails to provide the right and desirable combination of goods and services. Then again, the distribution function is to ensure equity and fairness for the well-being of all sections of the society, and achieved through taxation, public expenditure, regulations, preferential treatment to target populations. All the government welfare schemes is been prepared taking into consideration the targeted population. Accordingly, whatever the tax, the revenue that is been collected is been spent on the welfare of the people. So, distribution functions also is very important. Then the stabilization function, the aggregate economy in terms of labor employment, capital utilization, price level, and balance of payments equilibrium, that is also important as international payments for stabilization function. Now, one thing that is very important is how the government should prioritize. So, accordingly, there are three functions that is been there, that is allocation, also distribution and stabilization. Now, how to establish a balance between all three? So, there is always a conflict between different goals and the function of the budgetary policy. The challenge before any government is how to design a budgetary policy that one goal does not jeopardize the other. Now, definitely it's a challenge while designing the budget that equity and fairness, distribution, everything is been, apart from growth also, is taking into consideration. So, the role of the government is very important in an economic system. Then in public finance, we talk about market failure, market power, externalities, public goods, incomplete information, which is again not very important, because ultimately if you don't have the information at all, you won't be able to take the correct decision. So, now what do you understand by market failure? The market failure is a situation in which the free market fails to allocate resources correctly, in the sense that either there is overproduction or underproduction of particular goods and services, leading to less optimal market outcomes. Now, ultimately, failures does happen when either you are overproducing or you are underproducing. Means you don't have the exact measure of what to produce and at what level. Then there are demand side failure. The demand side failure is said to occur when demand curve do not take into account the full willingness of consumer to pay for a product. The supply side failure happens when supply curve do not incorporate the full cost of producing the product. So, accordingly, the demand and the supply side market failure happen if you don't able to calculate or estimate that what is the demand and in what quantity the supply need to be matched. If you are overproducing, again there is a loss. If you are underproducing, again there is a loss for you because the demands are not been satisfied. So maintaining a balance between demand and supply is quite a challenging task. There are four major regions for market failure, that is market power, externalities, public good, and incomplete information. Then excessive market power causes the single producer to produce or sell less than could be produced and charge a higher price of in a competitive market. Now, the thing is, if you are having more of a market power, definitely you can produce less and you can charge more. So this is again a challenge, that this sort of trend could not be established, because in what proportion it has been produced and what is exactly the requirement, that need to be clearly established, so that there is no underproduction or overproduction in the economy. Then externalities is also referred as spillover effect, neighborhood effect, third party effect, or side effect, which occurs when the action of the either consumer or the producer result in cost or benefit that do not reflect as part of the market price. The public good is defined as the one in which individual enjoys which is common to everybody, and consumption of good is no subtraction for individual consumption of other good, because you cannot differentiate between the two individual. Neither consumption of one affects that the other, like it won't be diminishing like in case of public good. Now, for market to be competitive or to reduce market failure, complete information is also important, and but it is not fully supplied in real world for goods or services due to highly complex nature of the project, because all the information that is been required to be in a perfect position is difficult in this real world. Although as much information you are having, it is helpful in prioritizing your policy or making your policy to give the best of the result. Then there is common assessed resource or common pool resources, that is a special class of impure public good which are non-exclusively, as people cannot be excluded from using them. They are rival in nature, and the consumption lessens the benefit available for others. Then asymmetric information concept is there in public finance, where there is imbalance of information between the buyer and the seller. Now, if the buyer and the seller is having less of the information, then this can distort the choices that they are making. So with asymmetric information, low quality good can drive high quality good out of the market. If you don't have this asymmetric, if we are having asymmetric information, means there is an imbalance in the information between the buyer and the seller. The low quality good can drive the high quality good out of the market. Then there is adverse selection situation, where quality eliminates high quality good from a market. Buyer expect hidden problems in item offered for sale, leading to low prices and best item being kept off the market. So if the information is not correct, is asymmetric, or adverse selection has been there, so definitely there is imperfection in the selection of the good also, and imperfection in the choice of the public also. Then there is a concept of moral hazard, where is opportunism characterized by informal person taking advantage of a less informed person through unobserved action. Because somebody is taking a decision without taking into confidence all the parameters or all the information that is required to have a proper action. Then there is subsidy concept has been there, where subsidy is a market based policy which involves the government paying part of the cost to the firms in order to promote the production of the goods having positive externalities. Because ultimately, if that has been required for the masses, now to supplement the supply, the government used to give subsidy to the producer so that they can produce more and everybody had an opportunity to use the goods and the services. Then there are two types of subsidies. Either subsidies is being given to individual subsidy or the welfare payments and unemployment benefit. These are the subsidies that has been given by the government. Most recently, different electricity subsidy, water subsidy has been given by various state government, which is the part as sort of a compensation for the higher price of the product. So the at least equilibrium or aggregate consumption of the person is not been discouraged. So accordingly, they can maintain a minimum basic level of living. So the government used to give this subsidy. Then support prices, the MSP that has been given to the farmer, that if you produce something, that the government will guarantee you that this is the minimum support price at least you will be getting if you are producing the commodities. So government usually intervene in the primary market, which is subject to extreme as well fluctuation in the prices. For example, crops, the government has initiated the minimum support prices program as well as procurement by the government agency to get the support prices. This is recently this agriculture agitation by the farmer are all basically to get the minimum support prices for the agriculture produce. So accordingly, the government has withdrawn the agriculture policy and the strike has been called off. Now, next important part is what we are talking about is the fiscal policy. Now, fiscal policy involves the spending pattern, the taxation, and the borrowing. How this pattern involves, involves the activity and the level of growth of aggregate demand, output, and employment. Because ultimately, a balance of the balance is to be maintained so that the taxation and the borrowing which influence the economic activity and the level of growth of aggregate demand, output, and employment. Because ultimately, in aggregate sense, all these three is very important. How much you are producing, how many people are getting employed, what is the aggregate demand, because ultimately the employment depend upon what is exactly the demand and how much you are producing. So accordingly, you can include that much people in employment. Now, the significance of economic policy as a strategy for achieving certain economic objective was not recognized as widely acknowledged before 1930 due to the classical economics, where it has been told that there are certain conditions which automatically will help the government back to the equilibrium level. So prevailing laissez-faire approach is there because there is no intervention from the government side, and accordingly corrective action is being taken and the economy is back to the equilibrium level. fiscal policy is in the nature of a demand side policy. Means how exactly the product is in demand, that need to be provided to the people, and accordingly fiscal policy is been designed so that the people who are earning more is been taxed at a higher rate than the people who are earning less. So accordingly the imbalance is bridged up, and this the spending pattern is been maintained at a certain level. So the concept in public finance, the role of the government, all the three roles, the allocation, distribution, and the stabilization functions, fiscal policy, other aggregates like market failures, what are the government intervention through market failure, then this asymmetric information, moral hazard, all of that concept I had just discussed to you are important, because generally in the examination mostly the questions like what is moral hazard, you had to explain in brief. So you had to write about moral hazard. So what is asymmetric information, how information failure happens. So this sort of descriptive questions of 2 marks or 3 marks is been asked in the examination. Calculation is less here in the public finance unit. So because mostly calculation is mostly there in the first unit of national accounting and macroeconomic aggregates. So accordingly you can prepare your strategy that for descriptive type of questions, at least this unit is having a weightage of 10 marks. So mostly questions regarding the explanation of the concept is been there. Krishna Sharma has given the right answer regarding the questions that I had asked of calculation of gross value added at market price. Correct, Krishna? Then spillover inflation is basically that is passed on to the other. Spillover is basically it has been passed on to the other, that is affecting the lower strata of the people. Then the next unit is the money market. The most important concept of money is what are the functions of money. Now money is used as a measure of value, as a store of value, the basis of credit, a unit of account, a means, a standard of postponed payment, and a medium of exchange. These are important functions of money, that how money is used to as different functions that already I had explained to you. Then there is different theories in demand for money. The first important is the Friedman theory. The Friedman talks about the speculative demand within the framework of asset price theory, holds that demand is affected by the same factor of demand or for any asset, permanent income and relative income. Because again the Keynesian motives is there. You are talking about the speculative motive, the transaction motive, the precautionary motive, the three different motives. Accordingly people used to prioritize their money, and accordingly spend their money keeping into mind what are exactly the motive of holding the money is. So the first thing is the transaction motive. Then there is precautionary motive is there. Then after, if you are left with anything left, then you can spend that money in speculation or in speculative motive. Then the nominal demand is positively related to price level, rise in bonds and stocks prices, and is influenced by inflation and is total wealth. Then other is the sources of money supply. The central bank of all countries issued currency, and therefore the central bank is the primary source of money supply in all the countries. In effect, high powered money is the source of all the form of money supply. Here the classification of money is important, that what is M1, M2, M3 and M4, the importance of that is there. The supply responses of commercial banking system change in money availability is by the central bank to influence the total money supply in the economy. RBI, as you know, is the central bank, and it used to regulate the money supply in the economy. Now, important thing is the measures of money supply vary to country from time to time and from purpose to purpose. The measurement of money supply varies from country to country, time to time, and purpose to purpose. In India, the RBI has been publishing data on 4 alternative measures of money supply. This is M1, M2, M3, and M4. The standard formula for calculating the value, this 4 measures of money has been prescribed by RBI, and you need to add the different component which is part of this calculation of M1, M2 or any M4. Like if you want to calculate M1, then what you need to add up? First, the currency and coins with the public, then demand deposit of the bank, both current and saving account, plus other deposit with RBI. If in the numerical questions, this 4 component has been there, you need to add up to get the value of M1. Now, if you had to calculate M2, then M1 plus saving deposit of post savings bank. Sometimes it happens that you have to calculate M1 and you have been given the value of saving deposit with the post office bank. Now you had to be clear in the mind that if you want to calculate, then post office saving bank's deposit is not to be added in calculation of M1. Then from M3, the net time deposit with the banking system has been added for after you have calculated M1, then M1 plus net time deposit with the banking system. Then M4 is M3 plus total deposit with the post office saving organization, including national savings certificates. Now, these formulas M1, M2, M3 and M4 are very important, and in your examination, generally one question is there, how to calculate M1 or M2 or M3, although there are pretty much lot of data that has been there to make you confused regarding the same, but you need to be clearing about that what are the items that consist of M1 and that need to be added while calculating the M1. Now suppose if you have given the data of post office saving bank and you need to calculate M1. Now you need to leave that data because that data is not required in calculation of M1. Now again, if M2 you have to calculate, then you have to use that data because M1 plus post office saving deposits, saving deposit with post office saving banks in India is to be added up in getting the value of M2. Similarly, net time deposit with the banking system is important in calculation of M3, not in calculation of M2. So accordingly, a minor distinctions has been there itself. So you need to be clear about that while calculating the M1, M2, M3, M4, what are the items that need to be added. So distinction must be cleared in the mind. In the examination also, many times question is been asked for calculation of this aggregates, and these are standard aggregate classification. We have not derived it, it has been given by the RBI, because RBI is the authority who used to control the money supply in the economy. Accordingly, they used to modify the monetary policy to maintain the liquidity in the economic system. Then there is a concept of money multiplier. Then money multiplier is money supply by monetary base, and the calculation is M is equal to M into MB. MB is money base, M is the multiplier, M is the and M, capital M, is the money supply. So if you multiply or if you use this formula, money multiplier is equal to money supply divided by money base, you can get the money multiplier questions. Again, the questions on money multiplier is been asked in the examination, so you need to remember the formula, that how it is important in calculation of money multiplier. So what is the value of money supply, or what is the value of the money base, monetary base? You can place the value, and accordingly you can get the value of the multiplier, or you can multiply money multiplier into monetary base, and if you are given the money supply, accordingly minor adjustments there, you can get the exact value of the money multiplier. Then there is credit multiplier. Credit multiplier is also referred as deposit multiplier or the deposit expansion multiplier. Describe the additional amount of money created by the commercial bank through the process of lending the available money. It had access to the central bank requirements. So again, this credit multiplier questions, there is how the credit multiplier reserve ratio has been 1 by required reserve ratio is how the credit multiplier is calculated. So again, this question is been asked in this May 22 examination, that what is the value of credit multiplier. Then another most important part in the money market is the monetary policy, because in the monetary policy, the supply of money is been assessed, and what are the measures to be taken to maintain the liquidity in the system. So monetary policy is a very important concept in money market. So you need to emphasize on what exactly monetary policy consists of, and what are the different tools to maintain the supply of money. So monetary policy refers to the use of monetary policy instrument which are at the disposal of the central bank to regulate the ability, cost, and use of money and the credit so as to promote economic growth, price stability, optimum level of output, employment, balance of payments, stable currency, or other role of economic government. So there are different objectives for any government that need to be fulfilled. Now the measures that has been there at the hand of the government is through the monetary policy or the fiscal policy, how to apply the tools to get the best effect. Like the first thing is the price has been rising one after the another, and there's a whole hue and cry that the price has been rising. Now the ultimate objective of the monetary policy is to maintain the price stability. Then again, growth is very important because for any nation to survive or any economy to survive, the rate of growth is very important. You must be reading in the newspaper or that has been appearing on every time in the TV news channels that IMF has forecasted about the 7% growth or 8% growth regarding India. So that gives confidence that how the economy is faring for India, and accordingly it will also affect the foreign investors who want to invest in India. So sort of a confidence building measures, this growth rate and the stability used to give to the investors. Then ensuring adequate flow of credit, so there is no hue and cry regarding the demand and supply of money. Then there is creation of efficient services by the government securities market, that has been also maintained by the Reserve Bank of India. So these are the major objective of the monetary policy based on which this monetary policy has been designed. Now recently what had happened that the government has also set up a monetary policy committee. We used to take decisions through their internal discussions, that what is the objective and what are the requirement basically in the economy to take up the required measures or suggest that measures, or to take decisions regarding the policy rate to how to maintain the economic policy, how to move ahead in the economy. There are tools like CRR or SLR, which is regularly appearing in the newspaper, and in the monetary policy measures also, the reduction in CRR and SLR also affect the money supply. So higher the CRR with the RBI, the lower will be the demand, will be the liquidity in the system, and lower the with the RBI, lower the CRR, the higher with the RBI. Accordingly, the liquidity is been defined through CRR. And what is CRR? CRR refers to the fraction of the total demand and time liabilities of a scheduled commercial bank in India which maintains its deposit with the RBI, respective of size of the bank. This is mandated by the bank that out of the total capital you are having, you have to deposit a certain amount of money with the RBI. So this is a requirement that every bank need to fulfill. Then there is SLR, which is the liquidity ratio, what is to be maintained. So liquidity ratio is what the scheduled commercial bank are required to maintain at a stipulated percentage of demand and time liabilities in cash, gold, or approved investment in securities. So again, the rate of CRR and SLR are prescribed by the RBI, and accordingly the banks had the obligation to maintain that amount maintained by the RBI with the RBI. Then there is a liquidity adjustment facility that has been extended by the RBI to the scheduled commercial bank, and in case of excess fund, they can also park with the RBI in case of excess liquidity, or basis against the collateral of government securities, state government securities. These are the facilities which has been extended by RBI to the different banks. Now again, recently in the it has been decided that a monetary policy committee will be set up, consisting of 6 members who will be deliberating in detail on a quarterly basis that what is the strategy, what is the rate that need to be maintained for economy to be functioning smoothly. So this monetary committee consisting of 6 members had determined the different policy rates to achieve the inflation target through debates and majority vote by a panel of experts. Now again, the inflation target of 4% that has been determined, mandated in the monetary policy committee. So they used to have a policy that the mandated rate that has been decided is maintained through policy interventions. So accordingly, the the reduction in the SLR, the repo rate, the CRR, how this adjustment can be taken place to maintain the liquidity in the system, and accordingly the growth also don't suffer at all. Then this monetary policy framework agreement is an agreement reached between the government of India and the Reserve Bank of India. Like just I told you that the consumer price CPI should be at inflation rate at 4%, which is a deviation of 2%. Then the choice of monetary policy is rather complicated in view of the surrounding uncertainties and need for exercising complex judgment to balance growth and inflation concern. Additional complexity arise in case of emerging market like India's. Now again, the thing is, there are plethora of objectives that need to be taken care of while deciding upon the monetary policy. So these objectives need to be balanced one while deciding upon the rates by the monetary policy committee. And generally RBI governor is the head of this monetary policy committee, and accordingly in every quarter they used to see how far the policy adjustment that is made in the previous quarter is giving the effect, or there are both short term and long term target that is given, and that is been designed so that how far it has been impacting the economy at large. Maintenance of inflation is the important target of monetary policy. So across at the time of designing this monetary policy or determining the interest rate, these all considerations are taken care of. Now the last unit is your international trade. Now India is and no country can live in isolation, because every country is not self-sufficient in itself. So definitely international trade is an important pattern to maintain what is required by what is required by the country. So accordingly trading system is been established, and accordingly trading pattern is there, so that the requirement of all the countries is been balanced one, with the export of the commodities or import of the commodities which is been required, or export if it is having a surplus or having an advantage in that. Now the first is the mercantilist view of international trade. Now mercantilists advocated maximizing export in order to bring more precious metal and minimizing import through state imposing very high tariff on important trade. Now this policy is basically focusing on the export and discouraging import, because if you are exporting more, then definitely more and more revenue will be coming, but ultimately you need also have the capacity to produce that good in ample capacity, so that you can have the surplus to export also. Then there is Ricardo theory of comparative advantage. Ricardo theory of comparative advantage state that a nation should specialize in the production and export of the commodity in which it has absolute advantage, and import the commodity in which its absolute advantage greater. Ricardo theory of comparative advantage state that a nation should specialize in the production and export of a commodity in which its absolute advantage is smaller, and import the commodity where absolute advantage is greater. So Ricardo has given his theory that when to have adherence to or thrust, when to give thrust on export or when to give thrust on import. So accordingly, he has given his theory. Then there is absolute advantage theory that has been given by Adam Smith. Adam Smith absolute cost advantage theory. A country will specialize in the production and export of a commodity in which it has absolute cost advantage. And because sometimes it happens that the country is having the natural resources or the cost of the labor is less in that country, so definitely producing the good in that particular country is an advantageous position. So they can have their advantage of when a country is having a absolute cost advantage, as according to Adam Smith, it can export the commodities. Then there is Hexer-Olin theory, which is talking about the factor endowment theory of or modern theory of trade. That comparative advantage in cost of production is explained in the different factors endowment. Whether you are having a surplus of capital or whether you are having a capital surplus in labor, accordingly you can devise your strategy. Then another important theory is the factor equalization theory. The factor equalization theory states that international trade equalize the factor prices between trading nations. Therefore, the free trade, wage and return will converge across the countries. Now, again, the factor cost across the different countries is been talked about to be equalized in the factor equalization theory. Then the new theory that has added up is the new trade theory. Now, new trade theory, the most important component is economies of scale and the network effect, which affect international trade in a major way. If you produce on a larger canvas, on a larger scale, then definitely you can have economies of scale and you can have greater profitability and you can earn more. Plus, networking effect also is very important in modern trade, because ultimately your relation with the other countries is also important, because if two countries is having a good relationship, they can give certain relaxation in the rates, tariff rates, or advantage in import or export of the commodity to the particular nation. So again, the networking effect is also very important, which has been talked about in the modern theory of international trade. Then there are forms of tariff. The specific tariff is a tariff. Specific tariff is an import duty that assigned a fixed monetary tax per physical unit of goods imported, whereas ad valorem is a constant percentage of monetary value of the unit. So accordingly, a certain percentage is been deducted as part of a tax in specific and the ad valorem tax duty. Then there is ad valorem tariff. Ad valorem tariff is there a constant percentage of a monetary value of one unit of the imported good. There are certain 5%, 2%, 1%, whatever the certain amount of value that has been there itself, that has been deducted as part of the ad valorem tariff. Then rampant these days anti-dumping duties is being imposed, because ultimately developed country used to sell their product to poor countries or less developed countries. The quality of the product is not up to the mark, and accordingly they sell at a lower price to clear out their stocks. So dumping occurs when manufacturer sells in a foreign country below the sales price in their domestic country or below the full average cost of production. It hurt domestic producers, because ultimately if you're selling below the average cost. So definitely the other domestic producer will be hurt by the this policy of the other manufacturers. Then anti-dumping duties are also been imposed, additional import duties, so as to offset the foreign unfair advantages. Now this dumping duties is been imposed so that it discourages the countries to dump the product in developing countries or underdeveloped countries. Now there is a concept of countervailing duties. Now countervailing duties are tariff to offset the artificially low price charged by the exporter who enjoy export subsidies and tax concession offered by the government in their home countries. Now, because ultimately to facilitate growth, different types of incentives is been given by the government to the producers, and accordingly duties has also been imposed. So the countervailing duties are the tariff to offset the artificially low prices charged by the exporter who enjoys export subsidies and tax concession offered by the government in the home country. Tariff barrier. There are effect of trade. Now, generally, most of the countries are working on the facilitation of trade so that it is advantageous for both the countries to live in the modern era, because ultimately no country is self-sufficient in its own way. So definitely they are interdependent on each other. Now the effect of tariff is to reduce the prospect of the market access, then make imported good more expensive. Through tariff, these action is taken, and these effects basically, if you're imposing a higher tariff, then definitely the goods that is been imported will be costing more. Then increased consumption of domestic goods. If you increase the consumption of domestic goods, then you will be hardly having that much of surplus to export also. So these effects of trade of tariff will be affecting the domestic as well as the international manufacturer to export or import. Then it also affect the domestic industries by giving concessions, countervailing duties, and all other measures that has been taken in international trade. Then it will increase effect of tariff will increase the government revenues. So if you are imposing some taxes, some additional taxes, then definitely that will be cost more, and the ultimate effect is the change in the increase in the revenue. Now, now this trade negotiation, you must have heard about regional trade agreements, GATT, General Agreement of Trade and Tariff, World Trade Organizations. These are all bodies or the agreement that has been set up to facilitate the trade between different countries. The trading blocks has been established to give concession to each other in facilitation of the goods from one country to another country. Now, there are different types of agreement in international trade. like unilateral trade agreement, bilateral trade agreement between two countries, then regional preferential trade agreement like SAFTA, NAFTA that has been created. Then trading blocks has been there. Free trade area is there. Customs union is there. Common market and common monetary union. Brexit and all other new forms of blocks that has been created to facilitate international trade between different nations, so that they can maximize on the revenue, and whatever the disadvantage the other country is facing, that can be compensated through mutually discussed agreement or the trade policy. Now, what is GATE? The General Agreement on Trade and Tariff was established in 1948, and it has ruled the world trade between 1948 to 1994. There are 8 multilateral negotiation rounds that has happened during the existence of GATE. The last round, Uruguay round, that is 86 to 94, was the last under GATE, and which culminated to the birth of WTO. Recently, WTO has also completed 25 years of its existence. Now, after the culmination of the Uruguay round, the World Trade Organization has been established, and the function of World Trade Organization is to act as a forum for trade, negotiation among member government, administrative trade agreement, reviewing national trade policies, cooperating with the other international organization, assisting developing countries in trade policy, and training programs. The principal objective of WTO is to facilitate the flow of international trade freely, fairly, and predictably. The world WTO is supported by a secretariat located in Geneva. It has three-tiered system of the top-level decision-making is the ministerial conference, followed by councils, and there is TRIPS council, service council, and intellectual property councils. So there are, this is having a three-tier structure, and accordingly the decision is been taken. Now, the major guiding principle of WTO is the trade without discrimination and the most favored nation clause that is been bestowed by one country to another when they are having a mutual sort of advantage in trading with each other. So it helps both the countries. Then national treatment principles, free trade, facilitate as much as the complications of the policies is been reduced to facilitate more trade between two countries. Then general prohibitions of quantitative restrictions, that certain countries have been restrictions that this much only you can export. So there is a quota system, or so to diminish this restrictions measures. Then to facilitate competitiveness, legislate made measures of protection, The most important thing is transparency in decision making, progressive liberalization, market access, transparent, effective, and verifiable dispute settlement mechanism. Because ultimately, if a dispute between two nations arises, there are forums where they can appeal, they can settle out the disputes. So the ultimate objective of WTO is to facilitate trade between nations and to minimize the disagreement between them. Now, there are few concerns also regarding this WTO, although 25 years of existence is been there, but there are certain restrictions also. Slow progress of negotiation, then uncertainties from regional trade agreements, inadequate or negligible trade liberalization, those which are specific concerns to the developing countries, protection and lack of willingness amongst the developed countries to provide market access, difficulties that is been facing in implementing the present agreement, apparent north-south divide, exceptionally high tariff, then tariff escalation, erosion of preferences, and difficulties with regard to adjustments. So sometimes in the examination, there are different advantages of setting up the WTO, but there are also concerns. So what are the different concerns that is there in WTO? So these concerns also need to be studied. Then again, this important chapters of exchange rate and their economic effect is important. Now, exchange rate, as you know, is the rate at which the currency of one country exchanges for the currency of another country. And this helps in international trade. There are both direct fixed exchange rate, there are flexible exchange rate. Now, most of the country have shifted to the flexible exchange rate. Now, exchange rate regime is a system by which a country manages its currency in respect to the foreign currency. Then there is floating exchange regime. The equilibrium value of the exchange is determined by the demand and the supply of currency related to other currencies, which determine the exchange rate. A floating exchange rate allows the government to pursue its own independent monetary policy, and there is no need for market intervention or maintenance of reserves. While volatile exchange rate generate a lot of uncertainties, advanced countries like US, New Zealand, and Sweden. So mostly the countries are adhering to the flexible exchange rate region. Now, a fixed exchange rate region, which are earlier been used, is the exchange rate in which exchange rate a government announces what its currency will be worth in terms of either another currency or a basket of currencies, such as gold. The central bank may implement soft peg policy under which the exchange rate is generally determined by the market, or a hard peg set as a fixed and unchanging value of the exchange rate. Then fixed exchange rate avoid currency fluctuation. The advantage of fixed exchange rate is avoiding currency fluctuations, eliminate exchange management risk, transaction cost, enhance international trade and investment, and lowers the level of inflation. But the central bank has to maintain an adequate amount of reserves and always ready to intervene in the foreign exchange market in case of uh, uh, fixed exchange rate, because that is maintained by the government itself. So it has to be ready for any eventualities that has been happening in the international market. Now, nominal exchange rate versus real exchange rate. Now, nominal exchange rate is how much one currency can be traded for a unit of another currency, while real exchange rate is change in the prices and describe how many of a good or services in one country can be traded for one or that good in another country. Now, real exchange rate is nominal exchange rate into domestic price index by foreign price index. Now, again, this question is been asked in many of the past examinations, that define real exchange rate, or how you calculate this real exchange rate. So put emphasis on this and try to remember that what exactly is real exchange rate is, or the real effective exchange rate. These are minor differences has been there in the terminology, but it carries quite a significance. Now, real effective exchange rate is the nominal effective exchange rate is the value of currency against a weighted average of similar foreign currencies divided by a price deflator or index of cost. Real effective exchange rate is the nominal effective exchange rate, a measures of the value of currency divided by a price deflator or the index of the cost, so that the disadvantage is been wiped out. Now, again, this exchange rate is been determined by the intersection of the demand and the supply. So accordingly, at this point, this is the point where there is equilibrium between the demand and the supply. So this is the ideal exchange rate for the country. Then there is foreign exchange market. The wide reaching collections of market and institution foreign exchange currency is known as foreign exchange market. There are very markets and institutions that manage the foreign currency is known as foreign currency market. Then there is over the counter market. It's not a physical place. It is an electronically linked network bringing buyers and sellers together, and there is very narrow spread. Then there is concept of arbitrage regarding of physical locations at given moment. All market tends to have the same exchange rate for a given currency. Arbitrage refers to the practice of making riskless profit by intelligently exploiting the price differences of an asset at different dealing prices. So these are the tools in the foreign exchange market which has been used by the government in maintaining the foreign exchange market. Then there is spot market. Current transaction which is carried in the spot market involves immediate delivery. Then is forward market, where contract buy or sell for future delivery, which is carried in the forward or future markets. Current market, which is carried out in the spot market, and contracts to buy and sell for future delivery are carried in the forward and future market. These are types of transaction in the foreign market: the spot market and the forward market and the future market. Then the important topic is about this international capital movement, where will be talking about the FDI and FII, FPI, foreign portfolio investment. Now, foreign capital may flow into an economy in different ways, such as foreign aid, grant, borrowings, deposits from non-resident Indians, investment in the form of foreign portfolio investment and foreign direct investment. So, the meaning of this is foreign capital can flow into an economy by different ways. Like we can give grant, we can give aid to other, we can borrow from different countries, we can deposit, we can get deposit from the non-residents Indians, investment in the portfolio investments, or directly the foreign direct investments. Generally, the government is encouraging maintaining quite liberal policy in the FDI, and even the defense sector has been opened up to a certain level for FDI. So, international trade, international capital movement, then talk about FDI, FII, which can be in form of aid, grants, borrowing, deposits. These are the normal tools which has been available. Now, what is the distinction between FDI and FII? Foreign direct investment is defined as a process the resident of one country acquires ownership asset of another country, and such movement of capital involves ownership control as well as management of in the host country. While direct investment are real investment in factories, asset, inventories, equity, the three in the form of intra-company loans. FDI can be horizontal, vertical, or conglomerates. Then there is reason for foreign direct investments are profit, higher rate of return, possible economies of large scale in operations, lower host country, environment label standards, tariff barriers, etc. Then foreign portfolio investment is the flow of financial capital which take in a form at below 10% and does not involve manufacture of goods and provision of services, ownership, manufacture, or control of asset as part of investment. There are different modes of FDI. Opening of subsidiary or associate in a associate, then modes of FDI: opening of subsidiary, equity injections, acquiring a controlling stake in a foreign country, merger and acquisitions, joint ventures, greenfield investment, and brownfield investment. Modes of FDI. There are different modes of FDI, like opening of a subsidiary or associate company in a foreign country, equity injection in a overseas country, acquiring controlling stakes, merger and acquisitions, joint ventures, greenfield investment, and brownfield investment. Now, greenfield investment, what does it mean? It means It means the greenfield investment established by a new overseas affiliate. नीचे आओ जल्दी. Greenfield investment established of a new overseas affiliate for freshly starting production of a parent company. Then there is brownfield investment, where the existing infrastructure is already there. Then that is supplemented of merging of infrastructure, acquiring, leasing, instead of developing a completely new one. For example, in India, FDI automated in brownfield investment projects. Now again, there are certain sectors where there is a prohibition in FDI, like lottery business, gambling and betting, including casinos, cheat funds, Nidhi company, trading in transferable development rights, real estate business or construction of farmhouses. Basically, these are the areas where FDI is been prohibited, like lottery business, gambling and betting, including casinos, etc., cheat funds, Nidhi company, trading in transferable rights, real estate business or construction of farms. Now, I'll be discussing about the few questions paper that has been asked in May 22 examination, that what is the significance of these questions, and how to write questions correctly, write the questions so that you can get best of the marks or higher marks in the examination. Now, क्वेश्चन थोड़ा सा जस्ट नीचे जाने. This is the recent question that is been asked in May 2022 examination for economics or finance. So throughout the deliberations, I had told you that which are the areas where questions is been asked for, numerical questions is been asked, or where theoretical questions is been asked, or whether theoretical prominence is been given. Now, just we had calculated this questions in my slide also, in the presentation also. Like here is a question that following information has been in given, like the value of the sales, intermediate consumption, closing stock, opening stock, net indirect taxes, consumption of fixed capital, mixed employer of self-employed, and compensation of employees. Now, in the presentation also we had computed this question, that how the gross value added at market price is been calculated. Sales plus change in stock minus intermediate consumption. Now all the values is been there. Now change in stock is what? Closing stock minus opening stock. This from 300 to 200, you subtract that, you get the value of 100. You add up 3500 plus 100 minus intermediate consumption is 400. You get the value of the gross value added at market price. You can, it's a very simple question. Only thing is, you need to remember the concept that what are the items that is been added in the production method, how to calculate this national income. Then again, if you calculate the GVA, you can easily calculate NDP at market price. And operating surplus, that in the question that we had done, we had calculated the operating surplus, that in the income method, rent plus this operating surplus mixed in of some self-employed is been added up. All the three component is been added up, and you can calculate the value of operating surplus. Then again, just we had discussed about the features of the foreign portfolio investment. What are the advantage of having a foreign portfolio investment vis-a-vis the foreign direct investment. Then another question is been asked about the comments of the role of the government in intervention for equitable distribution. I had just discussed about the three roles of Musgrave that we had discussed in the public finance section. Again, the same comments you need to give why the government intervention is required in equitable distribution, because how to have a distribution of the resources from the person who is in abundance to the person who is having in necessity. So this work is been done by the government, and this is the part of the three functions done by the government. Then again, describe the precautionary motive of the of money. Keynes has having the three motives: precautionary, transaction and speculative motive. So you have to define speculative motive, that why people keep money for precautionary motive. Then I had discussed about the the fiscal policy. What is the discretionary and what is the non-discretionary policy? The distinction you had to write. See, I had already told you that most of the questions that is been asked is of 2 or 3 marks question itself. So you need to be very precise and clear, and don't write anything which has been contradictory to what you have written above, because ultimately that gives the impression that you have not understood the concept properly. So if you know the correct example, then quote the example. Otherwise, even you have written the correct theory and supplemented by wrong example, it will be create a bad impression in the mind of the examiner, and you will be lose marks in that. Then countervailing duty, I had just discussed about in international trade. Then circular flow of money, how income, how in an economy that is being circulated. Then credit multiplier, I had just discussed you how this has been calculated. Reserve required ratio 1 by reserve required ratio is credit multiplier. So accordingly, you just divide all the three values that is been given, and you will get the answer of credit multiplier. Public good, we had already discussed about the public good. Aggregate demand functions, again this is very important function, because the distinctions between classical and the Keynesian concept, I had already told you that in the 2 sector, 3 sector or the 4 sector model, the important component that is been the aggregate demand, because ultimately the demand patterns helps in bringing the equilibrium in the economy. because ultimately if you demand, then accordingly the supply will be matching and accordingly the equilibrium will be maintained. Then simple question is, price is there, velocity is there. You know that MB is equal to PV is equal to MP. The value you need to just place the value and you'll get the value of the desired. The value of transaction, you need to value of T that you can easily calculate. Bound tariff I had just discussed with you. Then there is a question of fiscal policy. What are the objective of fiscal policy? I had just in my presentation also I had given you the detail regarding for what the fiscal policy is been designed, what is the importance and what are the different objectives of fiscal policy. Because if you are collecting, if you are imposing taxation, getting the revenue, ultimately what is the you have to do with the extra revenue that you are getting, or what is the effect of what are the extra tax you are paying on the rich. So ultimately you need to justify all this. Then again, this is a question that is recently been asked, that what sort of monetary policy will be followed, whether there is a discretionary expansionary monetary policy or contractionary monetary policy. If a reduction in CRR is there, what sort of monetary policy is there? You just have to write whether it's a contractionary monetary policy or it's a expansionary monetary policy. So this is what I had already emphasized, that while remembering or while studying, you need to have a sort of a analysis also, that what will be the impact if I am reducing the repo rate, what will be the impact if the repo rate has been increased, what will the impact. So accordingly, a simple analytical sort of question that has been there itself, you are able to explain in the examination. Then MPC I had just talked about you, del C by del Y is equal to MPC. So accordingly you can calculate the MPC. Simple questions has been there. If you are attentive, you can easily score very good marks in economics. Then again here, this monetary policy had explained you in detail M1, M2, M3 and M4. I also told you that what to be careful about, what are the different items that need to be added. Even you have been flooded with data, if the data is not been useful for calculation of a particular component that is being asked, don't use that data. You simply leave that data, because ultimately if you add up all the data, you will not land up with the correct answer. So I had just discussed there are 4 types of aggregates. Accordingly, the data is been given. You need to segregate which are the data is important in calculating M1 or M2. Then this is an interesting question. What is the outcome? This is I had discussed about externalities, market failure. Now again, there is a 2 situation has been there. Now you had to give the reason that what will be the outcome, like playing loud music at night and somebody is not sleeping properly. Now what will be the outcome? It's a negative externalities, because you are harming somebody with your with your work or with your whatever action that you are taking. Then wearing of mask during COVID pandemic, definitely it will be helping you in not being caught in the web of COVID, or you will be getting protection from COVID. So wearing of mask, what will be the outcome? You need to just define in one line or 2 line. Again, we had calculated in detail, we had discussed about the detail, the GDP, the GNP, the NDP, per capita, this private income, personal disposable income, all the value is simply been there. Now you need to calculate the value of private final consumption expenditure and this net value, net factor income from abroad, NNP at factor cost, or national income. You can easily calculate. I had just told you that NNP at factor cost or national income is the same thing. Even in the example, in the question it has been given national income, you need to calculate NNP at factor cost based on the data that has been given in the examination. In the question paper. Then again, new trade theory, we had already talked about economies of scale, and there are two components in the new trade theory. There is trade economies of scale, and there is one barrier that has been there. So two components that is important in the new trade theory. What is embargo? You need to discourage somebody, so you are putting an embargo on that. So most of my presentation that I had discussed with you in a 2.5 hour, all the questions that is been asked in the May 22 examination, if you study properly, you can able to answer each and every question that I had shown you, because if you listen to the deliberations that we had in the last 2.5 hours, you can easily see how the pattern of the questions is there in the examination, which area need to be given more importance, from where numerical questions more comes, where the theoretical questions are coming. But it should be not like that you are practicing only the numerical part, neglecting the theoretical part. That will not help you in getting a good marks. And the two analytical type of questions where I had just told you that what is the implications of the theory that you have studied, like externalities. Here we are discussing about the outcomes, playing loud music and wearing of mask, that you had to just apply that whatever the concept you have studied in public finance, how it will be helping in explaining the context of the question. Plus the force situation that already been there, only you need to see whether the monetary policy will be expansionary or contractionary, whatever the policy is been there, with the effect of the situation that has been given to you. So I think I had given you all the important tips and how to prepare for your economics paper. So mostly I had covered in brief, because definitely in detail I cannot cover in 2.5 hours all the syllabus that you are studying in 6 months or 1 year. So try to make a strategy, try to focus on your strength, and try to develop a reading habit, that whatever you are reading, you are able to comprehend that, and you are able to interrelate with the other concept, because mostly the linkage is already there at the intermediate level. At the foundation level, basic economics you have already studied, so definitely a sort of an interest is already been there in you. At the foundation level, if you practice to perfection, then definitely you'll able to get good marks. I hope mostly I'm able to answer all the questions, query that has been there itself. Regarding this, a question by Abhishek, that MTP questions for evaluation, you can send, we can give you the tips. You can give you the tips also to how to score good, apart from whatever the mistakes or whatever the good thing you have written about in the question paper. So I hope I'll able to justify my whatever the presentation that I had given to you, and some tips that are already told you, that how to study economics, what are the areas you need to focus, and score good marks in the examination. That's conclude my session. Thank you.